Welcome to the March 13th, 2023 Advance Report built for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, a fast-paced tour of the global financial markets. And I'm also president, McGowan Group Wealth Management. That's a team of 10 devoted to the success of the affluent families that we serve. You can set your brainstorming session time by simply going to networthradio.com, whether you want to come into the office at the Crescent or by Zoom if you're remote. So we look forward to meeting with you to update your plan for 2023. First quarter of 2023 almost over here in mid-March. March Madness coming up too. So what are we going to cover about the last cycle? Let's hearken back to the end of 21. This is going to become important as we go through the slides. End of 21 was an absolute frenzy in crypto and tech and venture capital and SPACs, special purpose acquisition companies, taking companies public, most of them losing money actually. And we issued that warning in 21 that things were getting frothy, and we raised some tactical safety. That's why you tune in to YouTube McGowan Group, and it's why you subscribe, because we're going to build on some of what's happened to actually take a look at the forecast. We're going to start with U.S. Treasuries and what they tell us about this Fed tightening cycle. The relentless Fed tightening cycle exacerbated the bear market cycle of 22. And now we start to see when the tide goes out, that means when the Fed stops printing money and they start dialing back liquidity. When the tide goes out, you find out who was bathing naked. That's a Warren Buffett quote. And this week, there were some banks exposed, and we're going to cover what that means for the banking system. Is it a Lehman moment? Well, likely not. But I do want to cover where the froth was, and it has to do with electric vehicle makers too. So, here we go. I look at the Treasury, it's called the yield curve. How much do you get for 6 months? You get 5%. Now, if I buy a Treasury and it doesn't mature for 10 years, if the rates go up, the value goes down, I have to wait 10 years for maturity. So, I should get paid more for that. The yield curve inverted. We are 3.7% now on the 10-year Treasury and the 30-year Treasury. The interest rate fell on Friday. The Dow fell about 1,000 points this week. You'll see that. What's going on? Well, March 22nd is the Fed meeting. What is the Treasury market potentially telling us? It could be that 2024 equilibrium is we're back to normal on cash rates, 2 or 3%, and something close to 4% might be the right yield on a 10-year by this time next year, because the Fed's pretty close to finishing their tightening cycle. The Federal Reserve tightening cycle may be coming to an end because they just broke something by going too high, too fast, and dialing back too much liquidity. What did they break? Well, remember, Federal Reserve is the banker's bank, right? They're the ones, they serve the banks. Well, when they start to break the banks, they get concerned, and the FDIC gets concerned. Silvergate, FDIC took them over this week. That was the crypto bank that reached a lofty high of $239, and now, well, below $3. What happened? Well, they were serving lots of crypto exchanges, including FTX, that is currently under investigation for embezzlement, has virtually been proven. So the depositors pulled out. You can get 5% in a 6-month Treasury. Nothing wrong with that. We do it for clients a lot for the tactical safety reserves. And boom, this is the withdrawals from the bank forcing the liquidation. There's another one of these. All right, Silicon Valley Bank. Well, they do startups, they do venture capital, they do mezzanine financing. What happened to tech? Well, the companies that are losing money, they can't borrow anymore. They're burning cash. The electric vehicles, Lucid, Rivian, Nikola, and Lordstown, They are all burning cash, have been for 7 years, and it's coming to a head. You can see it in their price charts. But what's happened with the electric vehicle makers, a lot of those got bank financing as well. So in California, a lot of the banks that focused on that, like SVB Financial, they went from 348 on Friday. They stopped trading at $39. Now, we don't know how they're going to reopen next week, but when the Federal Reserve sees that they're starting to get some trouble in the system, that may signal the end of their tightening cycle, even though Jerome Powell pledged this week to raise rates further because he seems to be angry that 311,000 net new jobs were created in the U.S. last month. He thinks it should be about 100,000, so you won't get inflation. The inflation numbers come Tuesday and Wednesday. That gives the opportunity to see, was it lower than expected or more? It'll be an interesting trading week. In the meantime, at McGowan Group Wealth Management, we are scooping up bargains to get pay raises in great assets, and I'll show you some of those great assets. This is the Dow over the past year. We have been in a nice trading range with 32,500 as the low and about 34,000 and change as the high right here. Boom, we just broke out below it. Anticipation of the Federal Reserve raising rates more than anticipated. So that says your 1-year return on the Dow is now minus 1%. So if you got big dividends, that's not as big a deal if you're getting some cash flow. Chevron. Oh, by the way, Warren Buffett bought more Occidental this week. He already had 21% of it. But anyway, Chevron, currently 162, the high was about 190. This is a 3-year chart. Why? Well, the best performers in the Dow, I'm going to cover 2 of them over the past 3 years. Chevron is one of them. The energy sector has a bright future between, especially now in 2026. Go to networthradio.com. You'll see these charts and graphs, but also the networthradio.com broadcast that's longer, where we explore more, is waiting for you there. Now, this is Merck, right? Look at Merck's 3-year history. They went from a low of 62 in the pandemic to a current $109. Merck is a good example of a dividend company at a low multiple. So that's one reason that we bring these to you. Medical dividends, energy, and global high yield is substantially discounted due to the Fed tightening cycle, which may be ending March 22nd based upon the banks that got slaughtered there. This is oil. Notice the tight trading range, 75 to 80. That's been true over the past 6 months. There are predictions of shortages between now and the end of the year, and the sector, of course, pays great cash flow. Not a recommendation for your portfolio till you set your own brainstorming session for a written plan from McGowan Group Wealth Management. I'm Spencer McGowan. Thank you for tuning in. We'll be back next week with the best in financial news. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss, at networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.